students, in present video I am going to explain about 14th problem from company accounts topic. I am taking this question from advanced accountancy subject BCom second year semester 3 Pankaj publications book. After 12th problem video, directly I am making 14th problem related video. 13th problem video I am not uploading because 13th problem, 14th problem both are same. Only amounts are different. Previous videos links are available in the description box. Let us see the question first. 14th problem. A limited company issued a prospectus inviting applications for 2000 shares of 10 rupees each at a premium of 2 rupees per share payable as follows. On application 2 rupees, on allotment 5 rupees including premium, on first call 3 rupees, on second call 2 rupees. Applications were received for 3000 shares and allotment made pro rata to the applicants of 2400 shares. Money overpaid on application was employed on account of sum due on allotment. Ramesh, to whom 40 shares were allotted, failed to pay the allotment money, and on his subsequent failure to pay the first call, his shares were forfeited. Mohan, the holder of 60 shares, failed to pay 2 calls, and his shares were forfeited after the second call. Of the shares forfeited, 80 shares were sold to Krishna, credited as fully paid for 9 rupees per share. The whole of Ramesh's share being included. Show journal and cash book entries and balance sheet. This is the question. Let us see the solution for this. There is one public limited company. Their authorized capital is not given in the question. Issued capital is given. Company issued 2000 shares at the rate of 10 rupees each. Here 10 rupees is known as face value of the share or par value of the share. Company wants to collect this 10 rupees on installment basis. First installment is called application money. On one share 2 rupees is the application money. Second installment amount allotment money 5 rupees per share. In this 5 rupee 2 rupees premium. Means actual allotment money is 5 rupees minus 2 rupees 3 rupees. First call 3 rupee per share, final call 2 rupee per share. So 2 plus 3. Actual allotment money 3 rupees only, no? 5 plus 5. Total 10 rupees. Plus 2 rupees premium. Means issue price is 12 rupees per share. Public applied for 3000 shares. So how much application money company received? 3000 into 2 rupees each, 6000 rupees. And to the applicants who have applied for 2400 shares, company allotted these 2000 shares on pro rata basis. Indirectly is giving that to the applicants who applied for 600 shares, company didn't make any allotment. 600 shares, how it is coming? 3000 minus 2400 shares. Means what? 600 into 2 rupees per share. 1200 application money company received now. That amount company returned to these 600 shares applicants. And to these applicants on pro rata basis company allotted shares now. So they applied for 2400 shares but company allotted only 2000 shares to them. Means on 400 shares at the rate of 2 rupees each, those people also paid extra application money 800 rupees. That 800 instead of returning to them, company wants to adjust for further installments. They have to pay allotment money, first call money, final call money, no? For that, this 800 rupee extra application money company wants to adjust. Next, one shareholder, Ramesh, is holding 40 shares. On these shares, he paid only application money. He failed to pay further installments and company forfeited his shares. And here the new point is, when company is forfeiting these 40 shares before making final call, means on 40 shares application money, allotment money, first call money. So these 3 calls only company made. Before making final call, 40 shares are forfeited. Next, Mohan, another shareholder. He is holding 60 shares. On these shares, he paid application money, allotment money. He failed to pay first call and final call amounts. And after making final call, his shares are also forfeited by the company. So Ramesh shares before making final call, Mohan's shares after making final call, company forfeited. Total how many shares are forfeited? 40 plus 60, 100 shares. And the company reissued 80 shares. In these 80 shares, Ramesh shares are included. Means these are 40 shares are reissued and Mohan shares 60 are there now. In the 60, 40 only company reissued. So 60 minus 40, 20 shares are not reissued. Company issued these forfeited shares as a fully paid. Means in books a company is writing that one share face value is 10 rupees only. But company issued them for 9 rupees. Means reissue discount per share is 10 rupees minus 9 rupees, 1 rupee. And one more important point you observe here. Ramesh paid only application money, no? So on these 40 forfeited shares, premium money is not received because company is collecting premium with allotment. Ramesh didn't pay allotment money. On 40 shares, premium amount is not collected. 60 shares, Mohan paid application money, allotment money. Means on these forfeited shares, premium money came. In previous problems, on forfeited shares, premium money used to come. But in this problem, new point is Ramesh shares, 40 shares. On these shares, premium money not came. And the company forfeited these shares. This is the question. So what is asking us to prepare here? Cash book, journal entries and a balance sheet. Let us see the cash book first. This is cash book. Particular amount, debit side, credit side. In cash book, cash transactions we are writing. So cash is an asset comes under real account. Real account rule, debit what comes in, credit what goes out. Therefore, if cash is coming to the firm, cash receipt, debit side we should show because debit what comes in. If cash is going from the firm, credit side we should show because credit what goes out is applicable here. So application money is coming, allotment money is coming, first call, final call amounts are coming, and finally forfeited shares are reissued, then also cash is coming. All these cash receipts, debit side we have to show. Excess application money company returned, no? So that cash payment, credit side we have to show. Finally, balance carried out. First what happened? From applicants, application money is coming. Company issued 2000 shares and the public applied for 3000 shares. So how much application money they paid? On one share, application money is 2 rupees, no? On 3000 shares, 3000 into 2 rupees, 6000 rupee money is coming. So debit side, 2 share application account, 3000 shares into 2 rupees each, 6000. Next, to the applicants of 2400 shares, company made allotment on pro rata basis. Then what about other applicants? 3000 minus 2400, 600 shares also some people applied, no? On these shares, there is no allotment. So indirectly the meaning is company returned this 600 shares related application money. So from the firm cash is going, this is cash payment, credit side it should come. Credit side, buy share application account on 600 shares at the rate of 2 rupees each, company is returning application money, no? 1200 on credit side. Next come to allotment. Application related 2 entries completed. Now come to allotment. Allotment money is coming. So cash receipt, debit side, 2 share allotment, 9016. How this amount is coming? I have shown here. See, to calculate this, first what we need? Shares applied by Ramesh we need. When applicants applied for 2400 shares, company allotted 2000 shares to them. To Ramesh, company allotted 40 shares. For how many shares Ramesh applied? That we have to calculate. So, when allotment is 2000 shares, public applied for 2400 shares. When allotment is 40 shares, Ramesh applied for how many shares? 2400 shares divided by 2000 shares into 40 shares. If you do that, 48 shares. So Ramesh applied for 48 shares and the company allotted 40 shares to him on pro rata basis. Next calculation, excess application money paid by Ramesh. Ramesh is applying for 48 shares now. On one share application money is 2 rupees. How much application money he paid? 48 shares into 2 rupees each, 96. But company is allotting only 40 shares to him. On 40 shares only he is supposed to pay application money. So how much application money actually he should pay? 40 shares into 2 rupees each, 80. So 80 rupee he should pay, 96 he paid. How much extra he paid? 16 rupees. That extra 16 rupees, now company wants to adjust for further installment. Nothing but allotment money. Next calculation. Allotment money not received from Ramesh. See, on 40 shares, because company allotted 40 shares to him. On one share, allotment money is 5 rupees, no, including premium. So on 40 shares at the rate of 5 rupees each, Ramesh has to pay 200 rupees for allotment. Through application, he paid 16 rupee extra. Company wants to adjust that. So that 16 rupee company adjusted from application excess money. Now finally, Ramesh has to pay 184 rupees through allotment now, but he is not paying that money. Ramesh paid only application money. So the amount which is not received from Ramesh for allotment is 184 rupees. Now final calculation is this amount. Amount received on allotment. So company allotted 2000 shares now. On 2000 shares at the rate of 5 rupees each, 10,000 rupees should come for allotment. When public applied for 2400 shares, company allotted 2000 shares to them. Means applicants applied for extra 400 shares. So on this 400 shares at the rate of 2 rupees each application money, how much application money extra they paid? 800 rupees. So that 800 rupees from allotment money company wants to adjust now. Therefore, minus adjustment made from application excess money. 400 shares into 2 rupees each, 800. Then remaining amount 9200 should come from applicants. And from Ramesh, allotment money is not coming now. Subtract that amount. So amount not received from Ramesh on allotment is 184 rupees. Then finally from remaining applicants, how much allotment money company received? 9016 rupees. That amount show on debit side. Next come to share first call. Allotment completed. Now come to first call. To share first call, 5700 is coming through first call. How this 5700 is coming? Calculation I am showing here. Finally, company allotted 2000 shares now. On one share, first call amount is 3 rupees. On 2000 shares, 2000 into 3 rupees, 6000 rupee first call money should come. And Ramesh, on his 40 shares, he is not paying first call money. So that amount we have to subtract. 40 shares into 3 rupees each, 120 is not coming from Ramesh. Then the remaining amount is 5880. Another applicant who is holding 60 shares, he also failed to pay the first call money. That amount also we have to subtract. 60 shares into 3 rupees per share, 180 is also not coming. Then the remaining amount 5700 finally company received through share first call. Therefore, to share first call 5700. Share first call completed. Now come to share final call. See, total allotted shares are 2000. In that, Ramesh shares 40, Mohan shares 60 forfeited. So on 100 shares, final call money is not coming. Then 2000 shares minus 100 shares. On 1900 shares at the rate of 2 rupees each, final call money came. So 1900 into 2 rupees, 3800. Next is for reissue. These 100 shares are forfeited now. Company reissued 80 shares at the rate of 9 rupees each. So how much money is coming through reissue? 80 shares into 9 rupees each, 720. For this 720, in particulars column, we have to write 2 share capital. Why 2 share capital we should write? For that, see this forfeiture entry. Forfeiture entry is bank account data, share forfeited account data, 2 share capital. 80 shares are reissued at the rate of 9 rupees per share. So 720 is coming. That amount we should debit to bank account. And In forfeiture entry, 80 shares at the rate of 10 rupees each. 800 from share capital account we have cancelled. When these forfeited shares are reissued, again that 800 we should add to capital. Capital is a liability. Liability shows a credit balance. That is why share capital account is created with 80 into 10 rupees per share, 800. So on one share in reissue, how much is the loss? One share in books we are writing that we are reissuing at 10 rupees, but from public we are collecting 9 rupee per share. So on one share discount loss is 1 rupee. 80 shares into 1 rupee each, 80 rupee discount loss. From share forfeited account credit balance we have to adjust. Therefore we have to debit share forfeited account with 80 rupees. This entry we are posting in cash book, nothing but in bank account. So bank account is debited now. Therefore this entry debit side we have to post. And what to write in particulars column? Other side account name. Other side means credit side. Credit side account name means share capital. That word we are writing here. So posting is completed. Next step, balancing. Debit side total 25,236. Credit side total 1200 rupees. So debit amount minus credit amount. Then the difference is 24,036 rupees. Credit side total is less. So credit side write that amount, and for that here you have to write by balance carried out. Two side totals same 25,236. So cash at bank amount is how much? 24,036. That amount in balance sheet asset side we have to show as cash at bank. So cash book is completed. Now for remaining transactions, let us write the journal entries. Take a screenshot of cash book. Take the screenshot of working notes. Continuation. First entry is for application. No? So money received entries in cash book I have explained. Now application money to capital account we have to transfer. No? That entry we have to write in journal. So when company received application money, in company's books, company credited share applicants. What is the entry for that? Bank account have to share application account. Means in books we are writing that for that application money, applicants are creditors to the company. That is why share application account is created. Now that share application money we are transfer into share capital. Means that a creditor account we are cancelling. By crediting we have created creditor account. If you want to cancel you have to debit. Therefore debit share application account. Share application account data. Finally company allotted 2000 shares now. So on 2000 shares at the rate of 2 rupees each, 4000 rupee application money we should transfer to share capital. Therefore 4000 rupee we should debit. 2. This application money we are transferring to share capital. Share capital is a liability. Liability shows a credit balance. Therefore credit the share capital account. Amount same 4000 rupees. This is journal. Serial number, particulars, debit, credit. First entry is share application account add to share capital account. 2000 shares into 2 rupees per share. Application money 4000 we are transferring to share capital. No, mention that as an addition. Being share application money on 2000 shares at 2 rupees per share is transferred to share capital account. Next is for transferring allotment money to share capital account. On 2000 shares at the rate of 5 rupees each, share allotment account data, allotment money should come. In this 5 rupee, 2 rupees premium. So actual allotment money is 3 rupees. Total how much money should come from applicants? 5 rupee into 2000 shares, 10,000 rupees. So for 10,000 rupees, applicants are debtors to the company. Debtor is an asset. Asset shows a debit balance. Therefore, applicants' names we have to debit. Instead of writing their names, we write share allotment account. 10,000 should come. In this, to share capital, actual allotment money only we should transfer. Actual allotment money on one share is 3 rupees. No? 3 rupees into 2000 shares, 6000 we should transfer to capital account. So share capital is a liability. Liability shows a credit balance. Therefore, credit share capital with 6,000 rupees. 2,000 into 3 rupees per share, 6,000. Then remaining 4,000 is what? Share premium. So on one share, premium is 2 rupees into 2,000 shares, 4,000. That amount is a capital gain to the company. So capital gain comes under nominal account. No? Nominal account rule, debit all expenses and losses, credit all incomes and gains. This is capital gain. We should credit to share premium account. To share premium account. Amount on 2,000 shares at the rate of 2 rupees each, 4,000 is premium amount. Second entry, share allotment account data to share capital account to share premium account. Narration, on 2,000 shares at the rate of 3 rupees each, 6,000 we are transferring to share capital. On 2,000 shares at the rate of 2 rupees each, 4,000 we are transferring to share premium account. Mention that as a narration. Being share allotment money on 2,000 shares at 3 rupees per share is transferred to share capital account, and the share premium money on 2,000 shares at 2 rupees per share is transferred to share premium account. Next entry is for adjusting application excess money for allotment. See, application entries once we recollect. When money is coming on application, these two entries we wrote now. So bank account data to share application account. Public applied for 3,000 shares at the rate of 2 rupees each. 6,000 is coming from public for application. So share application account is created with 6,000. And immediately on 600 shares, company returned this application money. For that entry is share application account to bank account. Here share application account is debited with 6,000 into 2 rupees, 1,200. So in 6,000 credit, 1,200 is debited. Then the remaining credit balance in share application account is 4,800. And in share application transfer entry, that in that 4,800, 4,000 is debited to share application account. Now finally in share application account, how much credit balance is there? 4,800 minus 4,800 rupees. Now that 800 is excess money because public applied for 2,400 shares, but company allotted 2,000 shares to them. So on 400 shares at the rate of 2 rupees each, public paid extra application money. 400 shares into 2 rupees each, 800 only. Now that 800 excess money, company is utilizing for allotment. So after that utilization, in share application account, balance will become 0. So this 800 is credit balance in share application account now. When you debit, then share application account will get closed. Therefore, share application account we have to debit with 800 rupees. How this 800 is coming? On 400 shares at the rate of 2 rupees each, excess money is that 800. That amount we have to adjust for allotment. See, allotment transfer entry when you observe, share allotment account is debited with 10,000. Means in books we wrote that for 10,000 applicants are debtors. They have to pay. Out of this 10,000, 800 we are adjusting from application money. So 800 applicants need not to pay. For 800 they are not debtors. By debiting we have created a debtor account. If you want to cancel, you have to credit. Therefore, credit share allotment account. Amount 800. Third entry, share application account data to share allotment account. On 400 shares at the rate of 2 rupees each, 800 excess application money we are transferring for allotment. Mention that as a narration. Being allotment money on 400 shares at 2 rupees per share is adjusted from share application account. Next entry is for transferring share first call amount to share capital account. See, share first call. Company allotted 2,000 shares now. On one share first call amount is 3 rupees. 2,000 shares into 3 rupees each, 6,000 rupees should come from applicants. Applicants are debtors for 6,000 rupees. So debtor means we should debit now. Instead of debiting applicants' names, we debit share first call account. Share first call account debtor On 2000 shares at the rate of 3 rupees each, 6000 should come. That amount we are transferring to share capital. So share capital is a liability. Liability shows a credit balance. Therefore, we have to credit share capital account to share capital account. Amount same 6000 rupees. Fourth entry, share first call account to share capital account. On 2000 shares at the rate of 3 rupees each, first call money we are transferring to share capital. No, mention that as an addition. Being share first call money on 2000 shares at 3 rupees per share is transferred to share capital account. Fifth entry is for forfeiture of Ramesh shares, 40 shares. In previous problems, we used to write forfeiture entry after completing all calls related entries. No? After final call entry, we used to write forfeiture entry. But in this problem, before final call only, we are writing 40 shares forfeited entry, because in question clearly is giving that Ramesh shares, 40 shares are forfeited before making final call. In previous entries, when application money, allotment money, first call money is transferred to capital account, we have created share capital account. Now 40 shares are forfeited, Ramesh shares. So 40 shares related share capital amount we have to cancel now. By crediting we have transferred to share capital account. If you want to cancel, you have to debit share capital account. So share capital account debtor. Ramesh shares, 40 shares we are forfeiting. On one share, how much we called? We are forfeiting before final call, no? Till that time, company called 8 rupees of 10. So one share face value is 10 rupee. And the company called application money, allotment money, first call money only. So final call money not yet made. On one share, final call amount is 2 rupees. So that amount not yet called by the company. Means in previous entries, capital account is created with only 8 rupees per share. So now we have to debit capital account with 8 rupees per share only. Therefore, 40 shares into 8 rupees per share, 320 rupees we should debit. So remember this point. In previous entries, while writing forfeiture entry, here we used to take face value of share, because after making all calls, company used to forfeit the shares. But here face value of one share is 10 rupee, but I am taking only 8 rupees here, because before final call only, company is forfeiting these Ramesh shares. Therefore, final call amount 2 rupee we should not consider here. Next, come to another new point, that is share premium. In previous problems, on forfeited shares, company used to collect a premium money. But here, Ramesh shares are forfeited by the company. No, Ramesh paid only application money. And the premium company is collecting with the allotment. Means on these 40 shares, premium money not yet received. Therefore, 40 shares related premium also we have to cancel. Previously, while writing this premium related entry, we have created premium with 4000 rupees. In books, we wrote that on 2000 shares at the rate of 2 rupees each, premium will come. In this 2000 shares, 40 shares, Ramesh shares, we are forfeiting. On these 40 shares, premium money not kept. Therefore, 40 shares into 2 rupees each, 80 rupee premium. From this 4000 we have to cancel now. So by crediting, we have created share premium account with 4000. If you want to cancel 80 of this 4000, we should debit share premium account with 80 rupees. So share premium account debtor. 40 shares related premium we are cancelling now. 40 shares into 1 share premium 2 rupee. Therefore 40 into 2, 80 rupees. Next, 2. Recollect previous problems related forfeiture entry. Here we used to write share forfeited account with the amounts which we received on forfeited shares. Here also same, to share forfeited account. On these forfeited shares, already how much we received? Application money we received. See, application money we received now. Ramesh applied for 48 shares. Company allotted 40 shares to him. How much application money he paid? 48 shares at the rate of 2 rupees each, 96 rupee Ramesh paid. So that 96 rupee company is not going to return to Ramesh because his shares are forfeited. So company retains this amount with it. So for company, this 96 rupees capital gain. Capital gain comes under nominal account. As per nominal account rule, share forfeited account, capital gain we are crediting with the 96 rupees. Nothing but amount received on forfeited shares. And on allotment, on first call, amount not came. Those two accounts we have to credit now. To share allotment account. How much? See, allotment money on one share 5 rupees, no, including 2 rupees premium. So Ramesh should pay how much allotment money? Company allotted 40 shares to him. On 40 shares at the rate of 5 rupees each, 200 he should pay. And in application, Ramesh paid excess amount. No? On 48 shares at the rate of 2 rupees each, 96 rupee he paid while applying for shares. Actually, company allotted 40 shares to him. So how much application money he is supposed to pay? 40 shares into 2 rupees each, 80 rupees. So extra 16 rupee he paid when he is applying for shares. That 16 rupee company wants to adjust for allotment. No? So from this allotment money to be received 200, if application excess money 16 rupees adjusted, then the remaining amount 184 rupee Ramesh should pay for allotment, and he failed to pay. So that 184 rupee we have to cancel now. 184. See the previous allotment related entry, second entry. We have debited allotment account with 10,000. Means in books we wrote that on 2,000 shares at the rate of 10 rupees each, 10,000 should come from applicants. For 10,000 applicants are debtors. Now 40 shares we are forfeiting. On 40 shares allotment money doesn't come. For 40 shares they are not debtors. By debiting we have created a debtor account. To cancel we have to credit. That is why share allotment account is created. Similarly, Ramesh failed to pay this first call money also. So that amount also we should credit to share first call account. Company allotted 40 shares to him. First call money on one share is 3 rupees. 40 shares into 3 rupees each, 120 Ramesh supposed to pay. And Ramesh failed to pay that money. So that 120 we should write here. Observe previous first call related entry. In fourth entry we wrote that on 2000 shares, 6000 first call money should come. Applicants are debtors for 6000. Now in this 2000 shares, 40 shares are forfeited. So for 40 shares, applicants are not debtors. By debiting, we have created a debtor account. If you want to cancel, you have to credit. That is why share first call account is created. So this is Ramesh 40 shares related forfeiture entry. Fifth entry, share capital account debtor, share premium account debtor, 2 share forfeited account, 2 share allotment account, 2 share first call account. 40 shares are forfeited now. So 40 shares related call money 8 rupees we are cancelling from share capital. That is why share capital account is debited with 320 rupees. 40 shares into 8 rupees. Previously share premium account is created with 4000. Now 80 rupees we are cancelling from share premium account now. Therefore share premium account is debited with 40 shares into 2 rupees each, 80 rupees. On forfeited shares, company received 96 rupees. That amount we are transferring into share forfeited account. The amount which is not coming through allotment first call, we are crediting to share allotment account, share first call account. 184 rupees and 120 rupees. Mention that as a narration. Being the forfeiture of 40 shares of 10 rupees each, 8 rupees called up for non-payment of allotment money at the rate of 5 rupees each and the first call money at the rate of 3 rupees each. Next entry is for transferring final call money to share capital account. See, final call on one share 2 rupees. 2000 shares company allotted. Before making final call only, Ramesh shares 40 company forfeited. So 2000 minus 40 on 1960 shares only, now company should receive final call money. So final call money on 1960 shares, nothing but 3,920 only we should transfer to share capital. So from applicants, 3,920 should come for final call. For this amount, applicants are debtors. Debtor is an asset, asset shows a debit balance. Means we have to debit applicants' names. Instead of debiting their names, we debit share final call account. Continuation I am writing here. Share final call account debtor on 1960 shares at the rate of 2 rupees each. 3,920 rupees should come. That amount we are transfer into share capital. So capital is a liability. Liability shows a credit balance. Therefore, we have to credit share capital account. Amount same, 3,920. Sixth entry, share final call account to share capital account. Total allotted shares 2,000. Ramesh shares 40 are forfeited no. On remaining shares 1,960 at the rate of 2 rupees per share, final call money 3,920 should come. That amount we are transfer into share capital account. Mention that as an addition. Being share final call money on 1,960 shares at 2 rupees per share is transferred to share capital account. Now seventh entry is for forfeiture of Mohan shares, 60 shares. In previous transfer entry, share capital account is created no. Now Mohan shares, 60 shares we are forfeiting. So 60 shares related capital amount now we have to cancel. By crediting we have created share capital amount. If you want to cancel you have to debit. Therefore debit share capital account. Share capital account debtor. Mohan shares are 60. At the rate of 10 rupees we have to cancel now. Observe. Ramesh shares related forfeiture entry when you are writing. Here at the rate of 8 rupees only we took. But while writing Mohan related 60 shares of forfeit entry, we are writing face value of share. Because Ramesh shares are forfeited before making final call. Only 8 rupee company called. Mohan shares are forfeited after making final call. Means company called total 10 rupees. Previously with 10 rupees only capital account is created. Now capital we are debiting with 10 rupees. Here previously capital was credited with 8 rupees only. Therefore now we are debiting with 8 rupees only. That is the difference. 600 rupees. Next, observe this entry. Share premium we have debited with 80 rupees. Because on Ramesh shares premium money not came. But here we should not write share premium account. Because on Mohan's shares, share premium is already collected. So Mohan's shares related premium money from share premium account we need not to cancel. Therefore don't debit share premium account. Next, 2. The amount which we received on Mohan shares, we should transfer to share forfeited account now. To share forfeited account. On Mohan shares, 60 shares, application money came. On 1 share application money 2 rupees, 60 shares into 2 rupee, 120 rupees came. Allotment money including premium 5 rupee. But here we should not consider premium because premium separately we are credited to share premium account. Again we should not credit to share forfeited account. Therefore actual allotment money only we should take here. So 60 shares into actual allotment money per share 3 rupee, 180 should come for allotment. So total 300 rupees. And this 300 is received from Mohan. That amount company is not going to return to Mohan. So that is capital gain to the company. As per nominal account rule, capital gain should be credited now. Therefore share forfeited account we have to credit with 300 rupees. Amount received from Mohan. Next, 2. Mohan is not paying first call money, final call money. So just like here also the amounts which we are not receiving, we have to credit. Share first call account. On 1 share first call money 3 rupee. On 60 shares into 3 rupee, 180 is not going to come. That amount we have to cancel by crediting share first call account. Similarly, 2 share final call account. On 1 share final call amount 2 rupee. On 60 shares 120 rupees. That amount. And observe one more difference. Here, while writing Ramesh shares related forfeiture entry, we have not created share final call account. But here we have created share final call account. Reason you can guess. While writing this entry, final call not yet made. Therefore, you need not to credit share final call account here. But here, after making final call, we are writing this forfeiture entry now. That is why share final call account also we are creating here. Seventh entry, share capital account data, 2 share forfeited account, 2 share first call account, 2 share final call account. Share capital is debited with 60 shares at the rate of 10 rupees each, 600. The amount which we received on these forfeited shares, 300, we have transferred to share forfeited account. First call money, final call money, 180, 120 are not coming now. For these two amounts, share first call account, final call accounts are created. Mention that as a narration. Being the forfeiture of 60 shares of 10 rupees each, fully called up for non-payment of allotment money at the rate of 3 rupees each and call money at the rate of 2 rupees each. Now last entry, 8th entry is for transferring the credit balance in share forfeited account to capital reserve account. So in share forfeited account, how much credit balance we have? Let us see that point now. So this is the calculation. You can see two tables here. In previous problems, we used to prepare only one table to calculate the credit balance in forfeiture account. But here why two tables we are preparing? Because Ramesh shares 40 are forfeited before making final call. Mohan shares 60 are forfeited after making final call. Two categories of forfeited shares are there. Therefore, in separate tables, we have to calculate the credit balances of these two types of shares. Calculation of profit on reissue of Ramesh 40 shares to be transferred to capital reserve. Amount forfeited on reissued shares, 96 rupee. To calculate this amount, there is one formula. Total amount forfeited divided by number of shares forfeited into number of shares reissued. Ramesh shares, 40 shares. He paid application money, no? 96 rupees divided by number of shares forfeited. 40 shares are forfeited into number of shares reissued. Company reissued 80 shares. And clearly in question is giving that in that 80 shares, Ramesh shares total 40 are there. Therefore, Ramesh shares are reissued. So take 40 shares. 40 will get cancelled. 96 in outer column. Minus reissue discount. On one share, discount is 1 rupee now. Because in books we wrote that shares are fully paid. But at the time of reissue from public we are collecting only 9 rupees. On one share, discount is 10 rupee minus 9 rupee, 1 rupee. On 40 shares into 1 rupee, 40 rupees the discount. If you subtract that from 96, then the remaining balance in share forfeited account, 56 rupees, we should transfer to capital reserve. Next come to Mohan related shares. Calculation of profit on reissue of Mohan 60 shares to be transferred to capital reserve. Amount forfeited on shares reissued. Total amount forfeited. Mohan shares, 60 shares. On these shares, Mohan paid application money, allotment money, no? Total 300 rupee came. Divided by number of shares forfeited. Mohan shares 60 we have forfeited into number of shares reissued. So total reissued shares are 80. In that 40 shares belong to Ramesh. Then remaining 40 shares are Mohan shares. So remember, shares forfeited 60, but reissued shares are 40 only. 300 divided by 60 into 40 is equal to 200 rupees. Minus reissue discount. Same, on one share 1 rupee is the discount now. Mohan shares 40 are reissued. Therefore 40 shares into 1 rupee. Remember, don't take 60 rupees here because reissue discount is not 60 rupee, 40 rupee only. 200 minus 40, 160 is the credit balance in share forfeited account for Mohan. Now these two credit balances we will add. Profit on reissue of Ramesh 40 shares, 56 rupees. First table answer. Profit on reissue of Mohan 60 shares, second table answer 160. Total 216 rupees. This is the final credit balance in share forfeited account. This amount we should transfer to capital reserve. Total forfeited shares are 100. Reissued shares are 80. Then 20 shares are not yet reissued. So these forfeited shares we are reissuing now. For 80 shares in forfeited account, credit balance is 216. Don't think that 216 is the credit balance on all forfeited shares. Only 80 shares, forfeited shares, related forfeited account credit balance is 216. So 20 shares are not reissued. Related to 20 shares also in forfeited account, some credit balance will be there. That amount we should not transfer to capital reserve because these shares are not yet reissued. So the credit balance of a share forfeited account which belongs to this 20 shares appears in balance sheet separately. Take a screenshot of this table. The credit balance in share forfeited account 216 we want to cancel by transfer into capital reserve. Means we have to debit share forfeited account with 216. Share forfeited account data 216 rupees 2. We are transfer into capital reserve no. Therefore credit capital reserve account to capital reserve account. Amount same 216 rupees. Eighth entry, share forfeited account to capital reserve account. The credit balance of share forfeited account 216 rupee we are transferring to capital reserve now. Mention that as a narration. Being the credit balance in share forfeited account is transferred to capital reserve account. Take a screenshot of journal. This is balance sheet. Heading balance sheet of limited company as a dash. Liabilities amount, assets amount. In liability side under share capital heading, we have to show different categories of capitals. Authorized capital not given in the question. Issued capital, company issued 2000 shares at the rate of 10 rupees each. 2000 into 10 rupees, 20,000. Subscribed capital, company issued 2000 shares. Public applied for 3000 shares. But finally company allotted 2000 shares only now. Therefore subscribed capital is also same. 2000 shares at the rate of 10 rupees each, 20,000 rupees. Called up capital, same. Because 4 installments, application money, allotment money, first call, final call, company made in current year only. Therefore, called up capital is also 2000 shares at the rate of 10 rupees each, 20,000. Paid up capital we have to calculate. Total shares forfeited 100 no, because Ramesh shares 40, Mohan shares 60 we have forfeited. In this 100, reissued shares are 80 only. So remaining 20 shares are not yet reissued. So 20 shares at the rate of 10 rupees each, 200 rupee we have to subtract from this 20,000 because 200 is not going to come. So minus share forfeited 200. Then the remaining amount 19,800 plus share forfeited account balance 100 rupees. How this 100 rupees calculated? Let us see. Share forfeited account roughly we will prepare with these entries. Share forfeited related entries. Let us post in that account roughly. In fifth entry, share forfeited account is created with 96 rupees. 96 rupees on credit side. Next, sixth entry, no forfeiture account. Come to seventh entry, share forfeited account is created with 300 rupees. Credit side 300. Next entry, 8th entry, share forfeited account is debited with 216 rupees. Not only these entries, even reissue entry also we should consider. In present problem, we didn't write reissue entry in journal because cash book directly we are preparing. But don't forget, in reissue entry also share forfeited account will be debited because on 80 shares at the rate of 1 rupee each, discount is there no in reissue, that is loss to the company. 80 rupee is the loss to the company. That loss from share forfeited account credit balance company is adjusting. Therefore share forfeited account is debited with 80 rupees. That 80 also comes on debit side. So finally how much is the credit balance in share forfeited account? Credit side total 396 rupees minus debit side total 296 rupees. So the balance is balance carried down amount is 100 rupees. This amount we should not transfer to capital reserve because only forfeited shares related share forfeited credit balance only we should transfer to capital reserve. Total shares forfeited, Ramesh shares 40, Mohan shares 60, total 100. But reissued shares are 80 only, no? So 80 shares related forfeiture account credit balance already we are transferred to capital reserve. This entry is for that only, no? Now this balance 100 rupee is what? Forfeited but not reissued. 100 shares minus 80 shares, 20 shares are there, no? So 20 shares related forfeited account credit balance is 100 rupees. This amount appears separately in balance sheet in the name of share forfeited account. 19,800 plus 100 rupee, 19,900 is the paid up capital. Next, under reserves and surplus heading, the credit balance in share premium account we have to show. How this 3,920 is coming, let us see. Recollect share premium related entries. In second entry, we have created share premium account with 4,000 rupees. In fifth entry, we have debited share premium account with 80 rupees. So 4,000 minus 80. Remaining credit balance in share premium account is 3,920 rupees. That amount we should write in balance sheet. Next, capital reserve. Forfeited shares related forfeited account credit balance. We have transferred to capital reserve now 216 rupee. That amount also under reserves and surplus we have to show. Finally, while totaling the liability side, don't consider issue capital amount, subscribed capital amount. From paid up capital, we have to calculate. So these three amounts total 24,036 rupees. We prepared bank account now, nothing but cash book. The debit balance in cash book is 24,036 rupee. That amount show under asset side. Finally, two side totals are same, 24,036 rupees. Take a screenshot of balance sheet. This is the end of present video. Hope this video is helpful to you. Thank you.